News9 Live. This is In Your Interest. I am Krishna Kumar. Now, the big question is what is happening in the Indian stock markets? Are foreign investors exiting the Indian market to go to China? Let's find out. Foreign portfolio investors, or FPIs, have been on a selling spree. They've been selling Indian stocks. How much? Worth a whopping $7 billion or nearly 59,000 crore rupees. And that's just for the month of October so far. This mass exodus comes as tensions flare between Israel and Iran in West Asia. Consequently, crude oil prices surge and the Chinese market shows some strong gains. Interestingly, this outflow from the Indian market follows a major inflow of over 57,700 crore rupees in the month of September, marking a sharp reversal in just a month. FPIs, or foreign portfolio investors who invest in Indian stock markets, have also sold Indian bonds. But net bond sales have been relatively modest at a little over 700 crore rupees, thanks to purchases of government bonds. Now, what's driving this trend? Well, it's part of a so-called rebalancing act. China announced a big economic stimulus package late in September, which caught the attention of global investors. Investment firms like CLSA have reacted by slashing India's overweight exposure from 20% to 10%. That's half. While Jefferies has trimmed its India weightage by 1% and bumped up China's by 2%. The shift is reflecting a growing preference for the Chinese market as it gets a boost from those stimulus measures, putting pressure on India stock market. Let's find out what's going to happen. Kranti Batini, Director of Equity Strategy at Wealthmill Securities, now joins us live on the broadcast. Kranti, thank you so much for taking time out to be with us. So simply talk to us. Are we going to expect more money to flow out of India and into China? And what does it mean for the ambitious targets for Sensex? One estimate is that it could touch 1 lakh by the end of this year. But looks like that's going to be a tough road ahead with now China coming back into the picture.
Yeah, Krishna, we can see some kind of hot money has been exiting in Indian markets. Of late, what we witnessed is past few quarters, a lot of ETF money and some hot money has entered into Indian markets. Right now, in terms of the relative valuations of Chinese markets, looks very attractive to them. Some kind of hot money and also the recent stimulus measures what Chinese government has taken up. Okay, some kind of hot money has been exiting in India. But at this point of time, we don't see any kind of long only money which has come into Indian markets that's not exiting. But the hot money has been exiting Indian markets because of the relative valuations of Chinese markets for them, because for them looks attractive because as a foreign portfolio investors, the hot money do come into the market, but since they have an option of other value buy for them in a medium to short term perspective, I don't think so that's going to last for a long time. It is a short term blip in the medium to short term. But on a longer term basis, relatively long only money has been waiting on sidelines to enter into Indian market. By and large, it's not a major concern. We have a strong foreign exchange reserves at this point of time. And this is a short-term blip at this point of time. And also, we have been facing the uncertainty around the escalating the global geopolitical issues, and also rising crude oil prices has been making the long-only investors to be on a wait-and-watch mode at this point of time. I don't think so. It's going to be a major concern in the longer term.
Not a major concern in the longer term, because the longer term India story is equally strong. But the problem here is what would you tell retail investors watching this broadcast, people out there watching this broadcast who have invested in mutual funds, we're looking to possibly exit mutual funds or enter mutual funds, or people who are invested in stocks who are looking to exit stocks or enter stocks and take positions. Tell us, from their perspective, how should they view the immediate near term?
Krishna, if you observe in the month of September, foreign portfolio investors have been the net buyers. In fact, they have bought for a tune of more than 55,000 crores. But whereas in the month of October, due to the rising global crisis, the geopolitical crisis in the Middle East, that prompted the investors to be on sidelines, and also the recent stimulus measures, as you mentioned rightly, in China, and also the valuations make this hot money to getting into Chinese markets. But whereas if you see the MSCI index allocation, the India's allocation portion has been gradually going up, and it is expected to rise further in the coming few quarters. So the MSCI allocation, which is the Morgan Stanley Asia Index, the India's allocation has been going up, whereas the China's allocation has been coming down, which is a very positive indication for the Indian markets on a longer term perspective. So the investors want to invest at this point of time, definitely any dip on Indian markets can be a very good opportunity. And right now, Krishna, if at all the same kind of selling, if we are just a decade back, if the same kind of selling is happening in the market, there used to be a carnage in the market. But Indian market has been resilient, and we reclaimed again the 25,000 levels.
All
So
right.
the domestic liquidity is so strong. So the investors who want to invest in Indian market, any dip in Indian market, it's a warranted buy for them.
Okay. Any dip is a warranted buy is the word coming from Kanti Patini. Kanti, thank you so much for taking time out to be with us. And with that, we're completely out of time here on this edition of In Your Interest. Thank you so much for watching. This is Krishna Kumar signing off.